Good morning, everyone. I think we're at 10 o'clock now, so we'll commence the meeting, please. So, welcome to everyone this morning. I think Emma Jones is joined us online for the external auditor, so welcome to Emma and everybody here. So, welcome to today's meeting of the ESPO Finance and Audit Subcommittee. This meeting will be being broadcast live on YouTube, and it will also be available for viewing after the meeting. Could I please ask that all members and officers have their microphones on mute until they are invited or wish to speak. And I need to let you know that we're not expecting a fire alarm today, so if one does sound, please use the stairs to leave the building and convene on the field opposite the visitors' car park, and please follow the Democratic Services officers. We have received apologies going on to the from Councillor Shayla from Cambridgeshire. As I said earlier, I welcome Emma Jones from TC Group, our external auditors, who is joining us online. So welcome. We can move to going on from that. We have the minutes of our previous meeting. But your approval, which was conducted on 30th of October, and I propose that we approve the notes of an in-court meeting and also the minutes of the meeting held on that date, so the 30th of October 2024, taken as read, confirmed and signed. So do I have a second? So those are then approved. Thank you. Item 2, direct declarations of interest. Does any member have any declarations of interest? No, thank you. Item 3, are there any urgent items? No urgent items. 4, we will go on to the external audit of the 2023-2024 financial statements. And this is on pages 9 to 28 of your agenda pack, and also the supplementary appendix that was circulated. So we can turn to Gary Tapp, our commercial financial controller, to introduce the item, and then we'll hand over to Emma Jones. Thank you.
Thank you, Chair. ESPO as a joint committee set up under Section 102 of the Local Government Act isn't legally required to have an audit. However, there are real significant benefits as it provides some real independence assurance to stakeholders over the financial statements and really supports our wider governance arrangements. So the auditors will normally confirm that the information in the financial statements is true and fair, a true and fair view, and not materially wrong in any way, and may draw attention to any issues that have arisen during the course of the audit. So TC Group have now concluded their audit and given the opportunity to report their findings directly to members. So at this point, I'd like to hand over to Emma Jones from TC Group, who's going to provide a brief overview of the audit and receive any questions.
Good morning all, and thank you for having me here today. Firstly, sort of a bit of an apology and just giving you the background as to why I'm sort of with you here today. So Richard Buckby, who has been the audit partner on this audit for the last couple of years, left the business beginning of October. So there was a handover plan in place for another audit partner, Ben Young, to take over from him. And those two have sort of been working closely together on the handover. Richard being involved for the first part of the audit for continuity, and Ben then taking over. Unfortunately, Ben has been taken ill and has been in hospital. Thankfully, he's coming out the other side of it now. So I've sort of been parachuted in the last couple of weeks. So, taken a fair bit of time to get up to speed on reviewing the file and catching up with the teams and things like that. However, I hands up, I don't have the background knowledge that obviously Richard had of yourselves, and haven't been able to have as detailed a handover with him and Ben as I would have liked. So I will certainly do my best to answer any questions you might have today. But if there are a couple of bits, I may need to revert back to the team. So just to give you a bit of an overview of the audit and where we're at, as Gary said, we have completed the majority of the audit. we anticipate we'll be issuing a clean audit opinion. I'll just sort of talk through some of the key points of our report and where we're at in the last couple of bits. We'll just need, after discussion today, to facilitate sign off, hopefully over the coming weeks. Hopefully you've all had a chance to read over the report that was circulated with the appendix. If I just talk through the sort of the key points on it. So as Gary mentioned, an audit isn't required due to the nature of the consortium. However, it's good practice to do so. So therefore we've conducted a non-statutory audit. So whilst there are various Companies Act elements that we haven't had to report on, we're still auditing in accordance with international accounting and auditing standards, and the accounts are following UK GAAP FRS 102, so we need to ensure we're still compliant with that. So as a brief overview, as I mentioned, the audit it's substantially complete. We anticipate we'll be issuing an unmodified opinion. A couple of points we sort of have left to discuss before finalisation. There'll be a letter of representation which will be sent for signature with the accounts. As in previous years, this will confirm various clauses in there that we're just asking you to confirm to us that all information has been made available to us, certain estimates within the accounts, you're happy, sort of the best estimate with the information provided. Things like key management remuneration, balances with related parties, all of those items will be included in the letter of representation. Confirmation of any post-balance sheet events that we need to be aware of up to the point of signing. Latest management accounts and board minutes, which I think actually Laura has sent over those last night. So that was sort of the last couple of pieces ticked off. So hopefully after today's meeting, we'll be in good position to sign off. Going through our report, we have to advise you of any ethical conflicts. Pleased to say that as we only do a pure audit for ESPO, there are no other sort of non-audit or other considerations we need to flag at this point. So we're satisfied from an independence perspective that we are wholly independent and can carry out the audit with no threats or other considerations to our audit independence. So then moving on, we'll look at the significant risk areas. So on any given audit, we always have to have revenue recognition and management override as sort of key areas that we focus on during the audit. Revenue recognition for yourself obviously covers all the various revenue streams. The only sort of 2 points to pick out on here is the framework revenue. During some of the testing this year, there was some gaps in some of the documentation and contracts available. We were ultimately able to complete the testing, and I understand a new committee has since been set up, and actually there's a focus internally on improving that process, so that is all underway. And the second point is the gas revenue, which again I understand, so previous policy has always been to recognise the gas 1 month in arrears, both from a sales and a cost of sales perspective. Whilst not strictly correct under FRS 102, in previous years we've always looked at it, and actually the movement from 1 month to next and at the beginning of the end of the year has been marginal, such that we've said actually it's not an issue we need to flag to you, because it ultimately would make very little impact on the financial statements. This year, because of the significant change in sort of gas when we looked at the cut-off, actually it became apparent that did need to be adjusted this year. So you'll see in the financial statements that accounting policy has been updated for it to be on an accruals basis, looking at the costs and the revenue for April to March each year, and the accounts have been restated in the prior year so that the comparative numbers are also correct. To give you an idea of the numbers, we're looking at sort of a 2 million swing during the year from the opening position of March and April 23 versus March and April 24. Outside of that, no other significant issues that we need to report. Management overrides. This looks at whether there are any sort of flaws in any of the controls and processes in place where actually they could be overridden and either journals or other postings made through fraud or error that have sort of not been captured. I'm pleased to say that there was no issues identified there. So we can see that from the controls in place are robust and no concerns there. Other couple of key areas we looked at due to their sort of significance in value and potential complexities and estimation uncertainty is the property valuation. So a revaluation was done during the year with a £700,000 uplift process in the accounts. From the work we've done around that appeared to be materially correct, and so we were happy with the carrying value of the property. And the next item on there was debtor recoverability. Again, given such a large balance at the year end, we do detailed testing around the debtors, looking at post year end cash collection and aging of the debt to consider whether any provision is reasonable. And I'm pleased to say that was all fine and looked to be in order, and no sort of significant changes in the provision were required. Next couple of pages look at any other key issues, so post-balance sheet events, going concern and related parties. And again, pleased to report that as far as we can see from the work carried out, we're satisfied with the disclosures in place in the financial statements, and there's no other items which need to be reported or disclosed. The next couple of pages in our report look at internal controls. So whilst there are a few items on here, the main thing to stress at the outset is these are mainly what we would grade low. In terms of significance, we report them because we have a duty to report them to you. However, we don't consider them to be significant such that they're going to create any sort of material errors in the financial statements or significant sort of override of controls. So, for instance, we got a couple of points on the payroll, appreciating that you have pay bandings in place. We just recommend a sort of tightening up of procedures in place as regards what goes on an employee's file. There was one instance where we were unable to identify or locate identification for one member of staff, so passport, driving licence, we were unable to find on file. So just recommending that all those checks and documents are in place and held on employee files. When we've looked at expenses testing, we found some invoices that were posted onto the system using a different date to the tax point on the invoice. You are certainly not alone on this. I think we report this on almost every audit. The reason being that the month-end cut-off process is completed, and then sometimes suppliers are late sending in their invoices. As the period end has already been closed, then quite often that late invoice will then be posted the first day of the next month, which is completely understandable, and it's been accrued, so there's no cut-off issue. The only reason we flag it is from a VAT perspective. HMRC could come along and look at that and say, well, actually the VAT has not been claimed at the tax point on the invoice. However, as we're looking at in-point VAT, actually it's almost in HMRC's favour. You're claiming it late. If anything, you're certainly not claiming it earlier than you should be. Hence, it's a low risk point we've set on there. A couple of points we noticed on fixed assets. So the register only being updated annually, and a significant amount of disposals were done during the year, which I think is a bit of a tidy up exercise. Some of those I understand actually were disposed of a number of years ago. Again, no impact to the financial statements because they'd been written down to nil already. However, just making sure that the fixed asset register is kept up to date with the assets that are currently held and being used by the business. On the next page, we've got a point around stock take and some discrepancies we identified during the stock take. You'll see later on in the report, we have got a potential extrapolated error that we've reported. To put a bit of context to this, when we come out and do the stock take, we only select a very small sample. So out of the stock population of £10 million, we sampled 40 lines of stock, which accounted for £114,000. So 1% of the stock is what we actually tested. So there were a couple of errors we identified during our testing. So the errors we noted amounted to £3,000, effectively 3% of the value that we tested. Because we've only tested a sample, effectively we calculate a projected error. So if that 3% error was across the rest of the population, there is a theoretical error of £300,000, which is what's in our report. I would just like to stress at this point, as I said, that is a projected error off a very small sample. So it's not really reflective of a £300,000 error. And again, given the movement in the stock, arguably some of those items that we'd sort of classified as errors could potentially have been in other locations in the warehouse. And I understand, again, post year end, actually all the stock is being brought back into one location, which should make any such checks more straightforward going forwards. So we've sort of classified it as a medium error within our report, but just wanted to give a bit more context to that point. During some of our testing, both on sales and purchasing side of things, we struggled in the first instance to get some of the documentation where that was held within customer and supplier portals. So not so much an issue for yourselves internally, it was more of an access issue, and both of which have now been rectified. But for your own internal purposes, we just obviously recommend that all invoices and sort of supporting documents that are available from third parties are downloaded, so you have a copy of them locally, rather than always having to rely on logging into portals in case access is restricted for any reason. Following on from that, and we're nearly at the end. The last couple of points we had on the report was around invoices not being processed in the final week of the year. So the accruals at the year end are quite high because of this, and include some estimations. So again, we just recommend that there is sort of sufficient time in the year-end process to be able to process those final year-end accruals and make sure that we're satisfied that the position is correct. Our testing did not suggest otherwise, so we were satisfied with the work that was done on accruals. But again, just a point to flag there around the postings at year-end. And the final point we've got on the report was around the VAT and climate change levy, which I understand from Gary, you're sort of seeking separate advice on this anyway. So there is a separate climate change levy that you are correctly reporting the figures on. However, those figures are also currently shown in box 6 of the VAT return, to which our understanding was they shouldn't be in there. Boxes 6 and 7 of the VAT return are sort of disclosure memo boxes anyway, so this has no bearing on VAT payable or receivable to HMRC. We're satisfied that is correct. There was just a query over whether those climate change levy bits should be reported in box 6 and 7 or not. I'd say, and some separate advice is being sought on that going forwards. So then the next couple of pages in our report are just showing a profit reconciliation of how we go from the first draft of the accounts through to the final versions that you have for approval now, and the couple of adjustments we've processed. The first one is around the defined benefit pension scheme adjustment, which is anticipated to obviously be processed each year once the actuarial report is available. This year, the report was showing a asset of £5 million. Prudently, I think the correct thing to do, and as has been done in these accounts, is not to reckon that asset, given the level of uncertainty over whether that is really recoverable in the future, and sufficient disclosure has been put in the accounts to note that asset hasn't been recognised. And then the second point is around the change in the gas revenue and cost of sales accrual, ultimately taking us down to a profit per the final accounts of just over £9 million. you'll see in the report there's then a second page showing the adjustments that have gone through to the prior year, just so that can all be reconciled. You can see the impact there. So the overall impact in the prior year on retained earnings brought forward is only £24,000. Hence, this has not been an issue in previous years. It's been highly immaterial. And lastly, we have our unadjusted misstatements. There are 4 items on that page, 3 of which are balance sheet reclassifications only, just where things could perhaps be presented slightly differently within different categories. There is only 1 item on there that impacts profit or potentially impacts profit, which is the stock extrapolation issue, which I mentioned earlier on, being a judgmental and theoretical difference. So the key thing to point out there is that there are no other potential issues or errors that we'd identified during the course of the audit. So relatively clean bill of health there to report to you. And that sort of takes us through to the end of the report. So I'm open to any questions that you may have. I'm happy to do as best as I can to answer them.
Thank you, Emma, for that very comprehensive report. And do we have any questions for Emma? Could I put a couple of questions to you, please, Emma, if I may? Forgive me if I just didn't hear you correctly. On the late adjustment for the vehicle cameras, 74,000. Yeah, that is a true expense due to the fact that the cameras themselves are quite a low value. It's just the numbers that have generated the large expense.
Yes, I believe so.
Yeah. And yeah, I note your comments about the VAT return. Sometimes it's difficult to know whether you include these things in the statistical boxes or not. As you said, it makes no difference at all. Yeah, and again regarding the invoices, although obviously there's some that comes down to practical issues, doesn't it, in terms of processing them rather than popping them in accruals. But the bottom line is just the same. Gary, how many physical stock takes do you do a day? A year, not many a day.
So we have multiple stock takes through the year, and we have kind of dedicated staff that are focused on kind of managing that stock and reviewing that stock on an ongoing basis, really. So the key stock takes, obviously we have the year-end stock take. Generally we perform the stock takes kind of in the school holiday period when we get a bit of kind of quiet time, really. So that's our chance to kind of do those sort of other, but we do other stock takes during the year as well, during school holidays. So it's quite regular. I think the extrapolation error, we don't believe it's relating to any significant missing stock within the warehouse. We just believe the stock was located elsewhere within the warehouse itself, really. What we do have this year is obviously all that stock from our separate warehouses, and the external warehouse in Leicestershire and the Kent warehouse is now all being put back into our Grove Park warehouse. So we'll certainly have much better visibility and control over the stock that we do have.
We're always going to get some obsolescence and write-offs. Trading. Yes, that's great. So, Emma, thank you so much for that. And we'll go to. So I would move that. That the external audit of the financial statements for 23-24 be approved. Could I have a seconder, please? Those in favour. Carrie, thank you. And thank you once again to Emma, who's more than welcome to stay with us for the remainder of the meeting, depending on your commitments, Emma. So if you wish to leave, that's absolutely fine as well. So thank you very much. Thank you.
Thank you very much. I have to go to another meeting, I'm afraid, but thank you. Thank you for your time. Bye-bye.
And good luck to your colleague who is hospitalised as well.
Thank you.
Okay, so if we can now move on to the report for the financial statements and annual governance statements, and we'll turn to Gary to present the report, please. Thank you.
Thank you, Chair. So the report sets out the 23-24 financial statements and the 23-24 annual governance statement. The F&A subcommittee is asked to recommend to Management Committee the approval of the annual governance statements and the 23-24 financial statements and the dividend pool of 6.1 million for payment in December as well. So for 23-24, the trading surplus reported to Management Committee was a surplus of 8.3 million. This was 2.2 million higher than budget and 2.4 million higher than the 22-23 result, which was a great overall result for ESPO. The financial statements are different to the management accounts due to some of the statutory adjustments, which Emma also kind of referred to already, including sort of pension adjustments, etc. And the external audit resulted in a clean audit opinion, which didn't identify any significant control weaknesses. So I think ESPO's financial position remains healthy with net current assets of 21.1 million at 31st of March, which allows for the dividend, the continued build of reserves for future investment, supports the working capital needs of the business. In terms of the dividend, each year ESPO pays a distribution back to committee members from the surplus it's generated, and the dividend provides a really valuable contribution towards public services. A dividend of 6.1 million is proposed, which is based on the management accounts. The statutory adjustments, including the large movements in the pension scheme, do not impact the value of the dividend paid. ESPO expects to be able to make that payment to individual members in December 2024. Moving on to the AGS, similar to the external audit, ESPO is not required to publish an annual governance statement. However, it's a really useful tool to review the effectiveness of ESPO's governance arrangements. The self-assessment survey that was conducted was really positive about ESPO's overall financial management and corporate governance arrangements. No individual question identified any key weaknesses and no significant governance concerns were raised. The AGS has since been reviewed by a senior management group and no areas of significant concern have been identified in the AGS. And my last point really, the subcommittee is asked to recommend the approval of the annual governance statements, the financial statements and the dividend pool of 6.1 million. Thanks.
The financial information. Do we have any questions for Gary? We've touched on these matters before in terms of the information we've had throughout the year. We've heard from Emma regarding the audit. So yes, a good outcome, I think, all round. So congratulations to everyone. And I know times are challenging, but we look forward to continued success in the future. And that's all very, very encouraging, I think. And again, I think the annual government statements, there's no surprises there. It's exactly what we expect. So I move that we recommend that the management committee, obviously because it has to be approved by the management committee, approves the 23-24 financial statements and the annual governance statements and the proposed dividend all of 6.1 million that be paid in December. So could I have a second? Thank you. Carried. So we then, if you could note for your diaries that the date of the next subcommittee meeting is scheduled for Wednesday, the 12th of February at its usual starting time at 10:30 here. And as we've previously discussed, there's no other urgent items. So with that, if I can move to exclusion of the press and the public, and I move that in accordance with the Local Government Act 1972, the public be excluded from the meeting for the remaining items of business on the grounds that they involve the likely disclosure of exempt information. So could I have a seconder, please? Wait for Anna.